Welcome to 2026. In this review, we will break down the key trends and insights from 2025, concluding with an outlook for the Sarasota luxury real estate market in 2026. The past year marked a clear transition for Sarasota's luxury real estate market as it steadily moved away from being shaped by short-term volatility and external influences. There were periods of economic uncertainty, stock market volatility, and anticipation around interest rate movements, which led many buyers to adopt a wait-and-see approach. For luxury buyers, rates primarily affected timing and psychology rather than purchasing power. Since the majority of luxury buyers still buy with cash, it was much more about stock market volatility than interest rates. By the end of the year, there was a return to the luxury lifestyle purchase alignment. Sarasota's luxury single-family homes inventory climbed at the end of the year, with the bulk of the inventory falling into the $2 million to $6 million price range. Rather than experiencing broad-based growth or contraction, 2025 eventually became a year of balance and normalization. A defining theme took hold: expanding inventory, more deliberate behavior from buyers and sellers, and mild price appreciation. By contrast, luxury condo inventory fell into a slightly lower average price range, with the bulk of the inventory priced between $1.5 million up to $3.3 million. Luxury condo inventory rose 53% at the end of 2025 compared to the previous year at the same time, and the days on market increased by 55% at the end of the year compared to the previous year. Overall, the luxury market in Sarasota unfolded in phases. Late momentum gave way to the previous year's caution, followed by renewed stability and an unexpectedly resilient finish. Taken together, these phases underscore a luxury sector no longer driven by weather disruption, but by intentional, well-informed decision-making on both sides of the transaction. In summary, last year's sales activity began the year with notable weakness. However, by autumn, the tone was positive. Inventory expanded without oversupply. Higher inventory levels across both property types gave buyers more choice and easing the intense competition that defined prior years. Therefore, this was not a surge driven by homeowners forced to sell. Instead, it reflected confidence among luxury homeowners who had waited for market conditions to stabilize. By December, inventory levels remained meaningfully higher than the prior year. This expansion played a central role in rebalancing the market, lengthening time on market, and shifting negotiations toward value-based decision-making rather than urgency. New home construction faced labor shortages and rising material costs that limited new luxury development sales. Buyers increasingly valued well-located properties with customization potential. In many cases, the most desirable luxury homes were not new builds, but thoughtfully upgraded residences within popular locations such as cultural urban centers, especially along the waterfront. In conclusion, the year was defined by balance and selectivity. Taken together, the past 12 months illustrated a luxury real estate market that has entered a more sophisticated phase. Buyers are active but selective. Sellers are engaged but strategic. Inventory has expanded, yet pricing remains resilient. Looking ahead as the market enters 2026, luxury real estate is positioned for measured strategic growth. Ultra-luxury demand is expected to remain stable, supported by new capital creation and continued wealth transition. If you would like to speak with me about real estate, feel free to give me a call or email me. And don't forget to check out my social media channels by typing in @BrokerBrink. I post fun Florida lifestyle videos weekly and new market reports like this one monthly.